TD Ameritrade darts data shows that customer transactions were up year over year, but down month over month. Nicole, explain to us what darts are.
Sure. DART stands for Daily Average Revenue Trade. Most brokerage firms have a mix of both the types of trades that customers would pay for and then those that they don't. So things like our ETF rebate program, those are trades that our clients would not pay a commission on, so they would not be counted in our revenue metrics.
Why is this so important to track? Because financial analysts on Wall Street, and I think it's very interesting for customers as well, it makes sense to look at DART's data to kind of pick up on other trends as well.
Yeah, I mean, for us, it's a quite sizable portion of our overall revenue, particularly in a near zero interest rate environment. And then I think for analysts also who are looking at our stock, it's a good way to look at the engagement of the retail investor. Of course, there are many different ways that you can look at overall engagement.
I think the timing of it is interesting because we had the IMX data that came out last week, and I really like to follow that one because IMX data shows what the Homegamer is doing. It's not anticipatory. It is a record of what they traded in the prior month. It's a lot of accounts. It's 6 million accounts. 40% of them are derivative traders. So the data that came from there, you saw retail investors shifting out of the momentum names into the larger cap names, which is why we saw the performance in the S&P and the Dow relative to Russell and NASDAQ. Do darts tie into that? Can you discern anything from that as well?
Well, a little, not really,
right,
not
okay.
really. So, when we release our monthly metric figures, the IMX results normally come first. And what we always tell analysts who ask us that same question is, no, you can't back into the IMX to figure out whether or not TD Ameritrade darts are going to be up or down. What I thought was really interesting with this IMX release is it's the first time that I've noticed that although our clients were net buyers, the score dropped slightly. And just like you said, that's because they're rotating into the lower beta stocks, which I thought was really interesting.
Well, I also find it interesting as well that this is happening before we're even hearing about it on network media or what we're seeing happen in the markets. So that the old adage of when retail gets in, that's the top, and vice versa with the bottom, it really isn't. The playing field is pretty level right now, and they are on par with a lot of professionals for that matter.
Yeah, that you said that gave me goosebumps because that's exactly what our mantra is at TD Ameritrade, is to really level the playing field. And for many, many years now, we've been hearing that the retail investor is the dumb money. Well, we spend so much time and resources building out great technology that they have full transparency into the markets, and we make great research, like research from the street, available to our clients so that they can have the same kind of edge that professionals have. And so what this the IMX shows is that our clients have been in it right since the very beginning of this bull rally. And today, in particular, the markets are hitting even higher highs.
All right, well, that's what we like to hear because we're all about the Homegamer at the street. Thanks,
Exactly.
Nicole. For The Street in New York, I'm Jill Malandrino.